When someone asks you if you're a god, you say yes.
Hey guys, Rafi here from the Endgame Investor, and today we're going to take up the inflation versus deflation debate. Is there going to be inflation? Is there going to be deflation? Inflation meaning rising prices, deflation meaning falling prices. The answer is yes, there's going to be inflation and there's going to be deflation. Specifically, there's going to be inflation, rising prices in consumer products. There's going to be deflation in asset prices, mostly in stocks and real estate, especially against real money, which is gold and silver. Now, I understand there is a big debate going on about interest rates and why aren't they rising? And if they aren't rising, then this is predicting that price inflation, consumer price inflation, is not going to get out of control, that the CPI has peaked, that the personal consumption expenditures data also has peaked, and we don't have to worry about rising consumer prices. This is patently false, and I can show you with very clear examples of things that are going on right now why this doesn't make any sense. But first, let's discuss in terms of pure logic and time preference and the question of human immortality. Now, first of all, let's answer this very simply. Why are interest rates not rising despite the fact that the taper has supposedly started? Well, if you look at the Fed's balance sheet from the beginning of its supposed taper, which was announced on November 3rd for starting later in that month, which we assume is somewhere in the middle of November, the taper was supposed to reduce monthly bond purchases from 120 billion per month to 105, tapering by $15 billion per month. Since November 3rd, since that date when the taper was announced, and it started actually in the middle of November, $215.524 billion has been added to the balance sheet. That's in about 5 weeks. It's supposed to be $120 billion a month before the taper, and now it's about $170 billion a month, meaning they are buying more bonds than they were before the taper supposedly started. So is this just a straight up lie about the taper? It seems that it could be. Well, technically, the taper really amounts to a new minimum that has to be purchased per month, that the Fed promised that its New York trading desk would buy a minimum of 105 instead of a minimum of 120 billion. It leaves into the taper announcement that if it is necessary for smooth market functioning to buy more than that, that's what the Fed's New York trading desk will do. And that appears to be what they're doing. So there is no taper. It's not happening, at least right now. Maybe it will. But why are interest rates not falling? Because they're buying even more bonds than they were last month. Now let's talk about human immortality for a minute. See that red line? That is 0% real interest rates. This graph, this chart that I jiggered, is the 10-year Treasury rate minus the US inflation rate, which I understand is not consistent throughout the years, but this is the closest I can get with a visual that can actually help see things. So here we have real interest rates are negative 5.379. The deflation camp talks a lot about what bond rates are predicting. So let's go into that logically. What are these bond rates predicting? What is a negative 5.379% real interest rate? What is that predicting? Well, it's predicting that people don't care if they get goods now or in the future. It means they have no time preference because interest rates being negative, they will lend out whatever and get back less, and they don't care. The implications of that are that humans are immortal because if they don't care whether they get goods now or in the future and they don't demand any premium for not consuming now and only consuming in the future, which is what a positive interest rate is, that means they have no preference, no time preference, which implies that they have infinite amount of time. And that means that all humans are immortal, which means that the bond market is predicting complete and total human immortality forever. Is that actually what's happening? No.
Are you a god?
No.
Because humans are not immortal, because we're all going to die.
Then
So what this is showing you is that the bond market is severely warped and manipulated by a Federal Reserve and other central banks buying bonds with new monetary units that they create out of nothing. And that is why interest rates are so negative, not because they're predicting inflation or deflation or whatever, because they are predicting that the Fed is going to buy even more bonds. Why are they going to buy even more bonds? Because they can't stop without destroying the bubble that they've created over the last 50 years. And the fact that the balance sheet is not shrinking or not even slowing down or tapering at all, it's growing even faster, shows that this is actually what is happening. Let's go back to consumer prices. What I focus on is food. Why food? Because that is the basic, most basic of all basic necessities. And food inflation right now, if you look at the personal consumption expenditures, the famous PCE, which is supposedly the Fed's favorite measure of inflation, you look here, the percent change from a year ago in billions of dollars of spending. This is food inflation now. It is above 10%. This was the spike. If you're going to ask the question, do lockdowns lower spending and do they hamper price inflationary statistics? In certain cases, in some things, yes, because once you're locked down, you can't buy discretionary items, but you still have to buy food. So here we see a huge spike in money spent in March 2020, over 25, 26, 27% PCE food inflation during that initial lockdown. So yes, spending goes down in many areas, but it always goes up in food because if you're not spending money on other things, you'll concentrate all your purchasing power in food and it will bring food prices way up, which is exactly what happened. And here we see that food prices even now are rising at about the same rate as they were in the inflationary 1970s and early 1980. And if we zoom in, what about base effects? Aren't base effects going to calm down the food inflation statistics? The answer is that already happened. You see here's the spike. If we zoom in, that price inflation in food was up about 26, 27% here in March 2020. Here's the base effect for March 2021, because if you're counting from a percent change from a year ago, the March 2021 level will be lower than the March 2020 level, which was 27%. So here is not a dip in prices, it's a dip in prices compared to the rise in prices that happened in March. But now we're back up at 10% and food inflation is not stopping. There is no more base effect, it will keep going higher. And once we get to March 2022, imagine how high, if you're comparing it to this one, food inflation statistics are going to be.
Yeah, you know, in some cultures, they only eat vomit. I've never been there, but I read about it in a book.
Now, let's answer that question. Is there going to be inflation or deflation? And I will answer confidently, there will be both. And all we have to do is look at Turkey, whose currency is collapsing, despite, yes, there's been a quick recovery in it because of a move that Erdogan made on guaranteeing currency losses with the state's budget, but that's only temporary. I don't know how long it's going to last, but the currency will keep collapsing once that ammo is out. So here you see Turkey food inflation in the blue line skyrockets when the currency falls, and then it falls back down as the currency stabilizes, but still stays above 6-7% minimum. And here you see the currency keeps collapsing against the dollar, which means against other currencies and gold too, and food inflation rises back up as the currency falls. So when you have a falling currency or hyperinflation, you have rising food prices. But you also have deflation. Deflation in what exactly? During hyperinflation, how could there be deflation? I'll show you. Deflation in Turkey? Yes, in asset prices. Here you have, on the left side, the Turkish Housing Index I got from Trading Economics, and here you see it goes up from 152.2 in October 2021, 209.9 in October 2020 to October 2021. It's up about 38% in a year. Well, that's great. What about Turkey? What about the gold price in Turkish lira? The gold price in Turkish lira is up over the same time frame, 108%. So you have Turkish housing is deflating rapidly against gold, against real money. What else is deflating? Have here the Morningstar Turkey Index level percent change. This is the Turkish stock market. And you see from a year ago, same time frame, the Turkish stock market is down about 14%. So you have deflation in asset prices in Turkish stocks, deflation in real estate in Turkish real estate, and inflation in Turkish food prices, which means you have higher inflation in consumer prices and deflation in asset prices. So what am I getting at here? Very simply, there is no such thing as deflation or inflation as a thing that affects everything. In a hyperinflationary economy, what you have is rising consumer prices and falling asset prices. This is what stagflation is. In a hyperinflation, it's hyperstagflation because the cost of living skyrockets and asset prices, even if they climb much slower then consumer prices, which means that the standard of living rapidly falls and you have hyperinflation in consumer prices and deflation in asset prices. That is what the bond market is predicting. It's predicting that the Fed is going to go back into the bond market and keep buying or never stop buying. And maybe they're actually lying on the taper, which is what we're seeing already. So they will keep buying bonds and trying to inflate asset prices. But as they do that, consumer prices will rise even faster. You will have inflation and deflation at the same time in different prices. And it will destroy stock portfolios and bond portfolios and real estate portfolios. And in that time, real money, gold and silver, will be the only thing that can save you and save your purchasing power and get you through this. Besides, of course, having your own food stocks and growing your own food and everything else that you need to do and staying safe. This is Rafi from the In-Game Investor. Merry Christmas to all those celebrating. Happy New Year to all those celebrating. And I will see you probably tomorrow.